Hello, I'm John Brink, and we are podcasting on the Brink from downtown Prince George, British Columbia, Canada. And for all those people that are watching us from around the world, they say, okay, we know where Canada is, in British Columbia on the West Coast, right? Right. And so where are you then, John? Well, we have a big city there called Vancouver. We are 500 miles north, or 800 kilometers for our European friends, north of that city, Vancouver, which puts us in the center of British Columbia, north-south, east to west. Beautiful, beautiful place. Today we have a very interesting guest, in particular talking about finance and related issues. His name is Joe Camberato. Joe is a CEO and founder of the National Business Capital, the leading fintech marketplace, financial tech, I presume that means, a shorting of that marketplace, helping entrepreneurs access competitive financing fast through an easy-to-use online platform and an experienced team. I love it because, especially these days, financing, access to capital at all, very, very important issues. So, hey Joe, welcome to the show.
Yeah, thanks for having me. And yeah, it's all about having a great team. And so many people are focused on tech today, but they forget about focusing on having great people. And we've kind of blended the two together, and I think that's what separates us from others.
Yeah. So, and we'll be talking about that, because obviously, globally, we're going through very major issues dealing with finance, and then obviously you are located in the United States with your company, but not exclusive to that region, I presume. And, in the United States being the leader on finance globally, or are, or were, or is, they are very, very interesting player in the scheme of capital around the world, in particular now, and then looking at the other issues dealing with, I'm in business, international business, do a lot of business in the United States. The first things that come to mind are tariffs, duties, and all those things. We'll be talking about that as well, and then obviously looking at the recovery, potentially, and then one of the questions I will have for Joe, for the public, is saying, I don't know, is the big R word getting closer and closer? And technically, or in reality, all things that we want to talk about. Joe, first and foremost, give us your background. And obviously, you have a very, very successful company. You're very, very successful in terms of with your company, fintech. And how do you help clients securing in excess of $2 billion in funding since 2007, which is nearly 20 years. So give us a bit of your background as to where did you start, how did you go there along the way, and at what point did you push the button towards seeing the niche in particular of providing a team and reputation in accessing capital?
Yeah, so I founded the company in 2007. I saw how challenging it was for business owners to access capital. They would get turned down from a bank, or they just didn't have, maybe a bankable business. Doesn't mean they weren't a good business. There's a lot of great companies out there that have great businesses, profitable, excellent credit, but just they don't have the requirements that banks need, asset coverage and things like that. So I kept seeing this over and over, and I thought it was really crazy. I started looking around. I started taking one client at a time and finding them a home.
So what were you doing then before you saw the opportunity of the niche? Were you then working in banking or financial institution? Your background must have already been finance and getting the experience and the exposure, right?
Yeah, I was in the mortgage business, and I had my core focus was actually working with business owners and and helping them get a mortgage or a line of credit for their or for their a home equity line of credit.
Right.
And I just saw all these businesses using their home equity lines of credit or refinancing their homes to fuel their companies.
Right.
And some of them, I was very interested in moving to the commercial side of the business, doing larger, big commercial loans.
Correct.
And with bigger commissions. And I also really enjoyed working with the business owners. And a lot of them kept asking me for business loans. And I just kept saying, like, why don't you just go to your bank? And even all the way back then, it was the same challenges. It's too frustrating to work with. They don't understand my business. I don't show enough. I don't have enough assets. They don't like my industry, whatever it was. And these were, business, like local businesses that were, some of them were big businesses. And I'm like, I don't understand this. So I started, kind of getting out there and going from bank to bank, and and then some folks shared with me opened up this world to me of non-bank lenders, which is really called private credit today.
Right.
And it's been around forever. Back then, a lot of these companies, this was 2000, this is really 05, 06. A lot of the lenders at the time didn't even have a website. You only really found them through, a trusted advisor and someone that kind of played in this finance world.
Or hearsay, or all of that kind of stuff.
Yep.
Right? Yeah.
Yeah, introductions. And so I started, finding this whole world of this non-bank, non-traditional lending. And I started placing deals and getting deals, clients for funding that they need. And I watched these companies grow. So, kind of fast forward, I started to not love what was going on in the mortgage world. Things started to not make sense.
Now, at that point, Joe, if I remember well, 2006 was when all of a sudden things became more difficult.
Credit started to deteriorate.
And we got into 2007, 2008, 9, and we know all the story. And then from there on in, we had gradual recovery,
So yeah, I was in the middle of everything at that point, and where I'm in New York, and it was kind of like a mortgage capital. I was watching credit deteriorate. I was also watching other mortgage banks at that time do very foolish things, and it just didn't seem sustainable to me. But I also said, wow, I'm watching business owners use their home equity lines of credit to fuel their companies. And if that music stops, they're going to still need access to capital. And there's this whole world of non-bank lending that no one knows about. And there was no big brand at this time of like a business loan broker that could help like place deals. No one was doing that at scale. So I set off to go do that. And National Business Capital was born.
So that is, just for us to understand, myself and my guest, that is a potential pool of capital that is called private equity that people have access to or have, but really have the challenge of no places to go that gives them a vehicle of some sort to use to do the pre-sorting of it, somewhat different than the bank approaches, but seeing, understanding the risk involved and building gradually a reputation of saying, that you represent obviously potential users of capital, but also you have to preserve your reputation as being, in terms of credibility, as to matching the ones that is private equity owners to potential clients. And the more successful they are, the more you build a reputation of getting more access to capital and at the same time finding clients.
Yeah, so private credit. So we don't, we do all of our deals are, debt deals that get repaid. We don't take any private equity stakes in companies. So all private credit or non-bank lending.
Right.
So basically, here's what most people understand. Then I'll go back to kind of the story of my business. Banks really look for. Banks all have a very similar formula, and banks really want the 3 to 4 core assets. So the obvious is real estate. Right behind that is heavy machinery as collateral. Then it's B2B receivables are assets, your AR,
Right.
but they have to be B2B, not to, you can't be doing direct to consumer. And then inventory. So banks want those assets. And if you don't have those assets, you don't meet that formula. So if you're a customer that's an HVAC company and you're selling direct to consumer, or you're an e-commerce business selling direct to consumer, or you're a restaurant, or even a doctor, like there's so many businesses out there that don't meet the bank's formula. They don't have AR. They don't hold inventory, but they're great businesses. So
now, one more, and thanks, I'm interrupting you a little bit, but I just want to make sure that my guests understand it and I understand it, saying that, you want the philosophy as to what are banks all about, what are they looking for as underlying assets for lending is pretty much globally. That I know. That's
correct.
Basically how banks work in Europe and around the world and in North America.
Correct.
Pretty much
exactly right.
Yeah.
They're all they're all the same. And then the other challenge is if you're if you're in growth mode as a business and you're not holding a lot of cash on your balance sheet or in your bank account, your profit margins are thin because you're in growth mode, it's very hard for banks to wrap their heads around that, and they're very conservative. Separately, banks have gone so far upstream, and private equity, meaning that they're all looking for deals that are 10, 20, 25 million and larger. They also, the banks, their business has been built around getting in deposits. So, and then also the way they underwrite is still very old school and manual. So for a bank to underwrite a lot of little deals, it's too time consuming. They don't have the deposits, and usually don't have the assets. So banks go very upstream, 25 million, $50 million fundings, 100 million, $1 billion, right? And along with that come banking relationships, a lot of deposits, a lot of assets, a lot of high value. So they have all the protection in the world, right? And there's this saying that banks will lend you an umbrella when the sun is shining, right? They don't like lending in unique weather and situations. So
exactly.
So I identified that and identified these gaps in the market. But there's these non-bank lenders that are out there. They don't take in deposits. They don't have the over-regulation that banks do. And they, focus on other things outside of the banks. So we focus on cash flow. We focus on the opportunity. We focus on what the business is doing. It's really more of like an old school underwriting. And initially, I started this platform. We started building systems, processes, technology, hiring people, and really streamlining the process. And I brought all of these lenders onto my platform, and we did a really great job of sourcing customers and saving them time and money and frustration. And then fast forward, we started to directly fund companies. We fund companies now up to $10 million with non-asset backed on our own balance sheet. And we're approaching about $3 billion in funds deployed. And the companies that we work with, where a lot of people get confused by this, we're like, well, if they're not bankable, they're not good businesses. All the companies that we work with are great businesses. A lot of them have been in business 5, 7, 10 plus years. A lot of them, have excellent credit. They're profitable. They're in growth mode. They just don't make sense for a bank, or they already have a bank, relationship or a bank line of credit, but it can't expand fast enough. And we'll fund alongside, their banking relationship where they can keep it in place.
Yeah, it reminds me a little bit of, I've been in business for a long time, for 50, 60 years. And so I always think about banks, they get you an umbrella to protect you from the rain, and when it starts raining, they want the umbrella back. So,
exactly right. Yeah.
And so, but at the same time, your business is likely, and correct me if I'm wrong, obviously you've been very, very successful in your model, but it also means that you're very, very good in identifying clients because the access to capital is critically important, but also to always find new clients and understanding what that client is doing. And even more importantly, in terms of finding the capital. The capital is there, and a lot of people that have a lot of capital will be available. The more successful they are in you placing their capital, but then you have to find credible clients, and that in particular now
Exactly
is
right.
challenging because of all the things going on. Just give you an example of my companies. I've been in business for 50 years, been successful. I have 10 different companies, do business in North America, have different silos. We have one silo that is lumber manufacturing, not so good right now. A lot of our market is the United States. We know all the challenges there, duties and potential tariffs. And then we do warehousing, distribution, logistics. We're probably the largest warehousing distributors in northern BC. And, with all the things that are going on, very, very good. And then we do real estate, residential, commercial, and industrial, very, very successful as well. So we have a good business model. So you're looking at the business model in terms of, okay, what is the growth? What are they doing? Which are the areas? What is the potential for growth? But the other one, very, very important, what is the ownership structure? What is the management team? And what is the predictability in terms of getting through the difficult times? In particular now, it's a difficult time because a lot of things have been directly or indirectly being affected by tariffs and protective governments, not only the United States, but all over the place, which means that they can, especially businesses that have a single focus, can be very vulnerable very, very quickly.
Yeah, I mean, it's been a wild time to navigate through. I mean, this year, just with the tariffs, but since COVID, I mean, it's been 5 years of unpredictability, uncertainty, and trying to navigate through the unknown. Just as you think certainty's coming back to the market, it gets, the rug gets pulled out from under you again. I felt like the first quarter we were finally making progress and back to business momentum, and then the tariff bomb dropped, and it really freaked the market out and created a lot more uncertainty again. So it's been an interesting time. I feel like there's two types of business owners right now and businesses right now. The ones that are kind of just, focused on their business and what's working for them and just staying focused and getting after it and driving and growing their businesses. And then you have a lot of other businesses that are in wait and see mode, which is definitely a dangerous place to be in. And they're not doing anything, and they're kind of running scared. But I think with, when there's uncertainty like this in the market, it also what creates the opportunity because everyone's dealing with it. And if you can, stay focused and not, be overly affected mentally, there are opportunities and deals out there that are, I think, being overlooked by a lot of different industries and markets because they're running on fear and scared, and they're not focused on what is working, for them.
Challenges mean difficult times, but also opportunity, because
Absolutely.
assets will become available that may be complementary to existing companies that have the ability to work their way through it, have solid management, but for companies to be successful, they must also think in terms of that through growth in particular is dangerous in a time that you do not have the right financial partnerships that easily get spooked rather than looking at the longer term. And that's why it is so important, I believe, to be predictable as ownership and having a management team, and to find capital now, and I'm sure that is the case around the world, but I'm talking more now from personal experience, North America being Canada and the United States, and to a certain extent Mexico, that there are opportunities, and that the interesting part that I find in a way, Joe, correct me if I'm wrong, is that we also in lumber manufacturing, there's all kinds of challenges between Canada and the United States in regards to lumber manufacturing, which is a key component to home building and housing starts. a lot of times what happens, correct me if I'm wrong, the way I look at it is that I had a number of companies in the mid 2005, 4, 5 that I acquired, and I decided to sell some of those key assets that I had in 2006 because my experience has been, for your comment, is that housing is the first one to go down, but also the first one to come back out again because it generates a lot of capital investment that will create a lot of activity in the financial markets. If the mortgage rates right now, if I look at the United States mortgage rates, 30-year mortgage rates is around 6.88%, nearly 7%. That's a major problem, on 30-year rates. And just talking about that, I watch this closely because on the 17th, which means next week, there will be an announcement of the Feds if they're going to lower the Fed rate that is now around 4%, I believe. The objective is to be at 2%, add to that 3% for mortgages. If that happened, if they were able to, it's likely they're now talking maybe 25 basis points lowering. If Trump got his sense, he would lower it by 3%. It's not going to happen. But even if it was between 1 and 2%, what would then happen is mortgage rates would come down to 4.5% to 5%. And instantly what that would do, it would push up the market again, because now what has happened, at least from my perspective, looking internationally, that tariffs, duties are negative to the economy because at the end of the day, the customers will pay for it in some form or fashion. So the key component that we are watching now is what will happen to the Fed rate next week.
Yeah, everyone's waiting to see what's going to happen with that, and then same time, just like I see, you have a lot of businesses in wait and see mode. You have a lot of consumers in wait and see mode. You have a lot of people holding onto their properties because they have low rates. There's not a lot of inventory in general in the U.S. There's been underbuilding, that's happened for the last decade. On top of that, now you have people holding because they don't want to go from a 2.5% or 3% interest rate into a 6.5%, 7% interest rate. So there's all these things that are kind of happening at once. At the same time, too, I mean, I think we're in a very interesting spot right now where you got a lot of debt out there at all levels. The government's got a lot of debt as a country. Businesses have a lot of debt, and even more, or maybe even worse, is there's a lot of consumer debt. So I feel like if right now it's very important that there is momentum that continues and gets really created and kind of powered in the economy, because I believe if you don't have that momentum, and I think it comes from the businesses first, we need that momentum. Consumers need those rate cuts. The rate cuts will help them on the mortgage rates. It'll also help them on credit card debt and other personal loan debt. But if you don't have that momentum, I think you're going to have people, in really tough spots. And unfortunately, as a company, we've, and maybe as a world, we've been addicted to debt. So you got a lot of debt out there, and all of that works great when everyone's paying their debt. But if we don't have momentum and things get really tight for people and they start defaulting on that debt, that's when you have a problem. And it goes back to a question maybe that you thought of asking earlier, the big R, question of recession. And it's hard to really put a really, it's hard to say. I don't know. 1 minute I feel like this economy could take off and we can be on fire. And then another minute I'm like, wow, we're in a really interesting time. So yeah, it's hard to navigate. It's hard to guess where we go.
Becoming political. The outsider looking in. From Canada. I'm a Canadian, although I was born in Holland. I've been in Canada for 60 years. And so I love Canada, but I also love the United States because I've been doing business with the United States well over 50 years. And so a lot of my friends are there. We're all one and the same, in my opinion. So what I believe is what will make success is that working, and that's not happening now. Hopefully we will get there at some point, that no matter what happens for the benefit of the United States, as well as others, in particular their friends, Canada, the United States, Mexico, have different elements that would make the region successful as North America combined economically. They have the power, economic power, access to resources and including labor if they work together. And that has not been very successful at this point. Hopefully, CUSMA, again, is being negotiated, the agreement between Canada, the United States, and Mexico, I believe next year. But by and large, they still are working together, but they can do better than that, I believe. And it is just a question of being on the same. There is lots and lots of problems around the world on the economic side, but also the other ones, obviously. It is critical for those countries, Canada, the United States, Mexico, work together. And that would create the power, I believe. It would create the economic power to be leaders again in business around the world. And so that to me is very, very important, because capital, either in entrepreneurship and people that work in those areas, and builders and buyers and expanding and all of those things, need a sense of reasonable expectations as to what is going to happen. That part is somewhat challenged right now, to put it mildly. And, so your comment.
Yeah, no, yeah. I mean, I listen, I think when, in general, when people work together, you can do great things. So I think working together is better than, fighting and not. I think it just needs to be fair, on both sides. And I think there's a lot of changes that are happening at once with the new administration, which can feel overwhelming for a lot of people, and a lot of tough decisions, have had to be made that probably haven't been made, in a long time. And I mean, it's impossible to do all of these different things that are, we've never seen all these things changing and happening at once. So, just putting the political stuff aside, I just think about, in any business, if you went into a large business, a large company, a large organization, and started making massive changes and doing a lot of those at once, there's going to be certain pockets of people that are frustrated. There's going to be pockets of people that are, are for it, so I think, all of our countries are big businesses, and there's a lot of changes happening right now that you got a lot of different opinions on.
Yeah. So the way I watch it is that I've seen a lot of this going way back. I'm 85 years young, nearly next month, November 1st.
You look great, John.
And trying to stay fit and healthy to fight all the battles.
I thought you were like 65. Wow, it's amazing.
Thank you. So
I'm serious. Yeah.
I was born in northeastern Holland in November the 1st, 1940. And so at the beginning of the Second World War. And, my mom and dad were married in 1938. They were in love. And my dad worked in a lumber company, and they had rented a house, and fairly quickly they had a boy and a girl. And then in early 1940, my mom was pregnant with me. And then the world started changing. Hitler had decided that Poland should be part of Germany in 1939. And the next thing that would happen was obvious, that likely he would feel the same about Western Europe. And so, and the fear was, and they drafted my dad into the Dutch army, and on April of 1940. And so the last time they saw him was just before the bombing of Rotterdam, when Hitler thought they didn't capitulate quick enough. So he bombed the center of this amazing city, Rotterdam. Thousands of people died. It would take for my mom 5 years before we knew if he was dead or alive. And so for all those years, she had three little kids, and and then obviously we were invaded then by the German army fairly quickly thereafter in April of 1940, and then things were never the same again. The first thing that I remembered is that when I was about three and a half years old, bombers overhead the Allied forces, as you know, in 1944, landed in Normandy. The amazing part about that, Joe, is that's why I'm sometimes troubled by the things I see today, and not being political, but that I see today, is who landed there: the Americans, the Canadians, and the UK, and they liberated Western Europe. And so I remember it well because at a great cost of lives in Normandy and making their way through, and as they did, the Canadians went north through France, Belgium, western part of Holland, and then we lived in the northeast, 10-15 minutes from the border with Germany. And so I remember it well, but the first thing that I remember was when I was three and a half years old in 1942 and 43, when they were bombing hundreds of bombers overhead, bombing the army infrastructure of the Germans, and they came over our part of Holland, the northeast in particular, and my mom would take us outside on the flat roof behind our house, and we saw the sound, hundreds of bombers. I will never forget it. I will never hear it again. And the reason that she did, she felt safer outside than inside. And in the distance, we see cities burning like Wilhelmshaven, Bremen, Kiel, Hanover, so Hamburg, and on and on and on and on. And so I remember that. The next one I remember is, in 1944, when they cut off all the food supply to Holland, and I remember the feeling of hunger. Even now, 80 years later, I still feel the feeling of hunger. And my sister, my brother, and myself, every morning in 1944, 5 years old, we would go into the railroad yards with gunny sacks, pick up anything edible and burnable. And wow. So that's what we did. Reason that we did as kids, because they wouldn't shoot us. They boot us one, we'd be back the following morning. And then, obviously, in early 1945, the Canadians and the Americans together, the Canadians had pushed through the north, and we were liberated. Our little town in northeastern Holland was liberated April the 12th, 1945. And so I remember with about 100 meters away from us, or somewhere around there, was a schoolyard, and that's where 25 Canadian soldiers from the Canadian Red Cross were stationed for about a month. And every morning we would go down there, and they would feed us. They would give us bread with cheese and the butter, and cheese, and then the cheese and the butter was bigger than the bread, and so when we didn't speak the language, but we did. And so that always stayed with me, and it made such an impression on me that when I grew up, I would go to the land of my heroes, Canada, and I did. And so when I was 24, but I remember, and I believe that's an important point that I want to make. The other point that I wanted to make is that it was in 1947 when Holland, or the rest of Europe, was decimated by war and years of war, that it was the Marshall Plan that, led by the Americans together with Canadians and the UK, but helped rebuild Western Europe. That's what I remember of North America. That's what I remember of Canada, the United States, and Mexico in the different way, in the UK, liberating and saying for all those that believe that this cannot happen and will not happen, it can. Overnight, things can change. And then the other part, with all due respect, some people don't maybe understand or believe, and I say that respectfully, that think that after the war, everything goes back to normal. It simply doesn't. for generations, it may stay as, for myself, still have the effect of PTSD, the inner child, and all of those things are being part of my life. And, seeing far too much that we should not have seen, people being dragged out of their houses, seeing carloads of legs and arms hanging out under the cloth that was covering them of dead individuals, may they be part of the population or Germans or other soldiers, all right in front of our house.
Wow.
And that part always stays with me. And that's why I believe it is so important for us that are so fortunate, that I do a lot of business as I said, in the United States and in Canada. In all the years that I've been here, fly around a lot, I always sit by the window, even in commercial flights, although I'm a pilot as well. But if I fly commercial, I sit by the window and I look outside. If I fly in Texas or in California or Washington, Oregon, and in those regions, and in Canada, I sit by the window. I say, it's paradise. It is paradise, and I'm so lucky to be here. And
we're very lucky.
So
we all are.
And I believe that's the most important part to understand, and that's why I feel we have to be appreciative of what we have and how fortunate we are, where we can help others that maybe are not quite as lucky as we are, and then the other part is being a leader of the world. And that's why I'm a believer in Canada. I'm a Canadian, obviously, but also the U.S. Population are friends of ours, and I believe that at the end of the day, the Constitution of the United States will survive over the next 200 years as it has for the last 250. It starts with we, the people, and ultimately that's who make the decisions, and that again will be the U.S. being in a leadership role again, together hopefully as North America with the Canadians, the Americans, and Mexico going forward. So I still, although we're going through challenges, because of the economic situation, things in the Ukraine and then the Middle East and other places, we're still very, very lucky where we are, and working together, to me, is so critically important.
Yeah, no, I agree. I wish we all could work together better. And I also agree with what you're saying, is I don't think most people, in the US and maybe Canada, I don't want to speak for Canada, but in the US, I think don't realize, how lucky we do have it. And there's so much complaining that happens here in the US, and
by us too.
It's ridiculous. And I appreciate you sharing your story, and it reminds me of, the stories my grandmother would tell me. She came over here from Italy on a boat in like 1915, and she lived through the Great Recession. And they used to, they were here in the US, but they would share a loaf of bread for their, that was their dinner for the week. And, and just, how challenging it was. And there was there wasn't a lot of opportunity. And, it was a crazy, scary time. And, that's one thing that really fuels me, to work hard and to make it happen, and and also to appreciate what's going on, because it's like there's so much great opportunity, and we are very lucky. We're also very safe, and there's these crazy things that happen in the world in these other countries that there isn't as much opportunity. And it's always mind-blowing to me, especially people here in the US that will complain about the US but have never traveled outside of the US and have really seen other parts of the world.
Yeah.
And, if you get out there a little bit, and I have, others have gotten out there more than me, but I've gone to some different places, and it's a real eye opener to say, wow, like we really are lucky. And I think about it all the time. Listen, I was lucky to be born here. I could have been born anywhere. Imagine if you lived in some of these other parts of the world right now where there's, missiles and bombs happening every day. I'm just lucky.
And for me at 85, I was there and I've seen it, and I have an obligation to share that at the risk of, I'm not being critical of the United States politically or otherwise. I think it is a great, great country, We are one and the same, in my opinion. All immigrants from somewhere else, as you indicated, with your grandmother came here in 2015 or 1915. That was in the middle of the First World War and under extremely difficult circumstances. And they have contributed greatly. And I think we still have that opportunity. And I think I have the liberty, the obligation to speak about these things because I lived it, I've seen it, I've done it, and I still believe that together we are strong, and that's why I'm here, that's why I'm in business. So just coming back to business, so what you did and where you saw the niche is unique. So are you doing, I can see the same observation that you make in terms of access to capital and why it is so difficult and why there is a niche of matching capital and entrepreneurship or business of different that need access to capital in either growth or for other reasons. It's not unique to the United States. Are you having clients in other places as well? Because the same problems that you indicated are here in Canada and in other places. And I would say, hey, I will be contacting you as well as saying, hey, Joe, what can you do for us?
Yeah, no, it's a good question. So it's funny, we have funded deals in Canada and some other places, other countries, but our core focus is really the U.S.
Right.
We will fund, an occasional deal in Canada, have in the U.K. and but what we're really good at and really where our best relationships are, and most of the lenders and that we work with do focus and can only fund in the U.S. and in time will that change and will that be a growth opportunity for us to expand into other countries? Yeah, it's something we've talked about and something that could change in the future. But really for now, our core is the U.S.
The observation that I make is simply because I see the issues being similar, and especially when I look at your bio, obviously, that is a niche that exists in other locations as well, and then obviously what is happening at the same time, we see more globalization in a number of areas. If I look at traditional media, to me is something special. It's, we have 4 silos. The one is lumber manufacturing, the other one warehousing, distribution, logistics, the other one real estate, and the other one media. So I'm an author, I'm a speaker and presenter, and then at the same time, I love podcasting, and so I look at media now. And we watch all the stations. I regularly watch CNN, ABC, blah, blah, blah. So we are one and the same virtually in those areas. On the other hand, what I see is that the viewers on the traditional media channels are declining substantially for a number of reasons that either, in my opinion, they are politically inclined in directions, but the other one, too many commercials, and I'm not sure they are as effective as they can be. And the same is happening in a way to newspapers, and other than making them large in some niche markets, but by and large they're declining, and saying that, that I believe podcasting and virtual globally, it's only at its infancy at this point and rapidly expanding. So, and I'd like you to talk about, because you're a very active podcaster. So what I've done is I want to be uniquely different as a podcaster. So I'm close to 1 million subscribers on YouTube, and then my podcasts are across the board of about all kinds of different topics. And then I do it globally. And then the other part that I do is that I release my podcast within 2 hours. And they are ready. Right. I do no editing on it, other than when we had a little bit of difficulty in the beginning of ours, I may take that debt space out a little bit, but otherwise they are what they are. And then all 461 of them, and you are 461, is that the only time that we considered doing the editing is he is sitting downtown Prince George, and right behind me you can see the blue sky and beautiful. And so I was introducing a guest, and all of a sudden the building started shaking. We had a 4.7 earthquake, and I said, "But
oh my God!"
Fortunately, I didn't swear. But, so, and then we said we should edit it out. I said, "No, we'll leave it in there." So we did that.
Yeah. Wow. Well, hopefully there's no earthquakes today.
No. So the point that I'm making is that I want to be uniquely different in my podcasting. I want to make sure that, I work with Podmatch that, and I believe you do as well, that find compatibility to guests. They've done a good job for us. And then at the same time, I have to be predictable, so I probably do about 3 or 4 podcasts a week where I'm a host, and then guesting maybe on 1 or 2 of the other ones. And so
That's great.
I like that. That works for me, and but I believe as it goes forward, the other one that I'm looking at is a platform in the next 3, 4, 5 months, maybe from now, that I see opportunity, and so,
Okay.
but it's an industry, media, and transition, and I see further decline in the traditional channels that we know, not only in the United States, but around the world, in my opinion.
Yep.
And podcasting will become more and more unique and different.
Yeah, it already has. And, then people are getting their media through and information through podcasts and through social media, especially platforms like X and obviously others.
Yeah.
Because they're getting real raw, footage, not manufactured, footage that, networks, require, their employees to say, right? People want the real honest truth. And
Exactly.
And it's amazing what's changed too is now like the real raw cut stuff is what does well, where, back in the day and many years ago, and not even that long ago, if you put anything out there in the world, it had to be like professional and professional done. There couldn't be, one little blemish or issue. And, now people actually want the raw, unprofessional stuff, and they just want the real truth. So,
and I like it because, you're a very interesting person. We've never met before. I looked at your bio, and there we are sitting here, nearly already interacting for nearly an hour. And we got another hour or 2 hours to go and because we got more and more in common as we go forward. And I think that makes that unique and different. And I think that's the niche that I believe has the potential of being successful. And it is, obviously. And but from my perspective in particular, I take some credit for it that even at 85, when I first started, there were no computers, there were no, there was a radio, small radio that you can play around with. That was technology. And since that time, we've gone through computers, which changed the world for all of us way back from the early 80s. And I send emails, and I'm working on computers. And the next thing that we have coming down the stream is AI, artificial intelligence, that is on its way that will equal or exceed what happened to computers and change the whole world again.
Yeah, exactly.
And I will be part of it.
I love that. Well, I love it, and I give you a lot of credit because my dad's 70. I don't even know if he knows what a podcast is, and he definitely doesn't know how to listen or watch one. So
you should send him
and not make
and
one
say,
or
"Well,
one.
this guy is 85." Now, the other thing that I have to do is the second last book that I wrote is this one, "Living Young, Dying Old." That's a picture of me, actually.
Yeah, I saw that. I saw that in the background there. And
I'm the oldest competitive bodybuilder in North America.
That's amazing.
Getting
It's
ready
awesome.
for
Well,
the Arnolds
great.
for the second time in
Oh, wow.
2026. And then
That's
the
awesome.
last one is the one that you saw behind me that came out July 31st, $1 billion communication skills. And it's all about, this is not a book about how to become a billionaire. You can in the process, but this one, become a good communicator, because all those guys were successful not because they were good communicators, they acquired the skill of becoming good communicators, and subsequently, if you ask each one of them in some form or fashion, that likely would make them the most effective.
I love that. That's great. Yeah, I look forward to checking out those books. Well, you're definitely, living by what you say, and do, and what you're writing there. So, it's really great to see.
So one more question as we go forward, so we're reaching nearly our hour here, is that, the how do you see it? We discussed, the economy and a number of other things, but and doing it apolitically, but saying that I believe that the United States, Canada, and Mexico will come closer after things settle down in regards to all of that, because that makes sense for a lot of reasons. The other one is that, I'm optimistic looking forward in terms of the economy. I believe that the Feds will make an adjustment. Just becomes a question of what will it look like, but it has the potential, if the indicators support it, because if it is done politically, that would affect the Canadian, the U.S. dollar globally, and the credibility of the Feds, which I believe is very, very important to be used as for the fact that they are credible, making adjustments only that are justifiable. But the indicators, correct me if I'm wrong, show that an adjustment is justifiable. It just becomes a question of what is it. But any adjustment downward will be an indication. I still look forward to the rest of the year being a challenge. Likely maybe Q1 of 2026 things will start turning around, and from there on in I'm optimistic in the medium to long term, somewhere around that time, things turning around and the economy coming back, and again, North America will be very, very successful for opportunity, investments, and entrepreneurship.
Yeah, I am as well too, and none of us can predict the future, but as long as you're willing to make changes and power through things, even if things things do get bad, that always does create the opportunity, and I'm always optimistic around that to find it. But I do feel like we're going to have a strong fourth quarter. I do see things heating up from my view. We see over 1,000 financing applications every single month, and a lot of people are coming to us with opportunities. They're taking action. We have a large pipeline. We're starting to see M&A activity really heat back up, and there's just, there is a lot more positives that are happening than I see at a Main Street level that aren't talked about on a Wall Street level. And you slowly see the confidence coming back. So I think you sprinkle a little rate cut in there. I think we're going to get a 0.5 point rate cut. I think we kind of have that. I think we're going to end the year in a really strong place. And I think, 2026, I think could be a year where we really see that momentum come back. There's, again, I mentioned this earlier, but there's just a lot of changes that have happened, and we really haven't seen the outcomes of it. Obviously, we still need to get these tariffs, the loop closed and fully completed. But there's also been other things that have happened where, in the U.S., where manufacturing and other things and investments, have been committed that really haven't, started. There's so much happening with AI, but AI needs data center builds, which is we're already seeing spur up construction industry and equipment purchases and things like that. So there's things that are happening and changes that have been made that feel a little frustrating right now, but we haven't even seen the positive benefits just yet. So, I don't think we're going to start to see that stuff until, 26 and even 27. But I think we're building, back to a momentumous economy, that we really haven't been in a while. We had some false momentum from, a lot of free money that was thrown into the system. But, at the end of the day, I think there's still, even with all the noise and uncertainty that's out there, I still think that we're holding up pretty strong, and there are a lot of good things that are happening. And at the end of the day, businesses have been forced to go back to building great businesses that aren't built on fluff. So in a weird way, people have had to be extra resourceful right now, and I think that does build great, long-lasting companies. So I think as we move forward into the future, I think we're going to be into a really good place, and I'm excited about that.
And so am I, and to our friends, and we are friends in the United States and Canada. We'll do it together as we always have done, and together we are stronger, and that is important. Now, share with us any of your information for those that like to get more information from you before we go.
Yeah, so you can check out my company. You can go to nationalbusinesscapital.com, or you can follow me, Joe Camberato, on LinkedIn, YouTube. It's LinkedIn or YouTube / Grow by Joe. That's Grow by Joe. And we've got a bunch of stuff on LinkedIn that I constantly share about what's going on in the world, business financing, what we're seeing out there. And then I think I have over 500 videos on YouTube where I just share things that I've done as an entrepreneur that's helped me be successful in growing a business, tax advantages, and then just how financing works on the business side, which most people just don't understand. They're great at their business, and there's all these different programs and products out there that all have reasons to use them, and I talk about that constantly. And my goal is to empower entrepreneurs to use capital the right way and grow better businesses.
And for all the people watching us from around the world and speaking about finance and financing in a general sense, and capital and politics, if you wish, around it, I hope you like our podcast, both mine and Joe's, Grow by Joe. Subscribe to us, because that indicates to us that you like what we are doing. Give us comments if you think we make other changes, and then share it with others, and comment if you wish. And again, Joe, it was a pleasure and a privilege to have you on my podcast. Let's make sure we stay in touch, and say to your dad, and should I send him a copy of this book and somebody else?
Please.
Okay.
Yeah, please do.
I will send you 2 copies of the books. I will send you this one and the other one, and then
awesome.
With your dad, say, you met this guy, who? I'm sure you love your dad, so but
of course.
It's quality of life that is the most important. That has been the most important for me. I'm sure it is to him as well. And to me, the other one is attitude, passion, work ethic, but will follow his success. And quality of life, critically important.
Good stuff. Those are great things to follow, and I believe in them as well too. I appreciate it, John.
It was a pleasure. Stay in touch.
Yeah, same to you. Be well. Keep doing what you're doing.
Okay, take care.